Good afternoon, everyone. Welcome back to another video of the weekly analysis. Today, we're going to continue the same discussion of your midweek update. Before that, let's quickly look at the larger time frame because someone asked a question, what has happening in the larger time frame? We'll discuss that. And an important point in this video will be reverse the count. Now, I'm sure everyone has learned your Elliot Wave Master course. For the new members, all the price analysis we do here is based on the Elliot Wave Master course and also the advanced concepts. But advanced concepts is not it's not a public lecture series; it's private. Anyway, here what we're going to discuss is one of the method where I like to do is reversing the counts. Okay, we'll try to reverse the counts. Usually what happens is there is a starting point and people start counting less, but today what we're going to learn is reversing the counts. All right. So basically it's kind of reverse engineering. Another method which we're going to discuss, one of my private research, which I've told you a long time before, is volume analysis. This method I'm not going to discuss. I'm just going to give you one of the observations which I have in the market, and that is a very, very important point going forward. Is there a massive trap in the market? Is there a big move which is brewing in the background? We'll discuss that. And after that, we'll just discuss our usual time analysis as well as your intraday and weekly methods. All right. So let's begin with the higher time frame count and Nifty. This is what we discussed last time. I've especially told the advanced concept members from the level of 24,240, right? This high was made on 3rd of Jan high. This entire move which is happening right now is a single move. Now, what do you mean by single move? So let me just go up into an even more higher time frame. Let's go to a daily time frame. In the daily time frame chart, you can see very clearly that there is one move here, another move here, another move, another move less, right? So the question here arises for wave counting. For a naked eye, you cannot understand what exactly am I telling. This is especially for the advanced concept members. I'm telling you guys to start your analysis from this point onwards and consider this as a single move. You know how to check the magic EMA and reason, all that you already know. So for those who want to understand the higher time frame count of what I am considering, obviously I've told this many times before, do not compare my analysis with other YouTubers or other analysts, because what I do is totally different from them. I have some certain rules which I follow, certain principles which apply on all time frames and all markets. All right. Simple. A fall from here, we discussed last time. If this is your diagonal pattern, right? If this is a diagonal pattern, then there is a swing high pending in the market. If it's not a diagonal pattern, if it's just your A, or let's say a W pattern, this is your X or B, and then we are going for C wave. This is your question, right? So we have confirmed that this is not a C wave as of now. This is your 3-wave pattern which started here, a small pullback, and then we are in another either impulsive pattern or a 3-wave pattern. We'll go further and we'll discuss that. So right now, I hope that's clear for you what we are looking at on the higher time frame. The person who asked me a doubt, this is what I'm explaining from the level of 24,200 or the January high. All right. Now going down to a smaller time frame, let's start reverse engineering this. Now this level, we have already caught this level. All right. This level using your FRVP zone, I have given this in the live market. When the market was trading here, we had two options. Market will either continue its fall or market will go towards 23,050. This was the level, and the high made here was 23,049. We've discussed all this in detail in the midweek video, and after the midweek video we discussed, we're looking for a fall in the market, right? The minimum target was here, and in the live market also I updated when the price touched this level that be careful, don't trust any up move till the expiry. The reason was very simple, that this was a three-wave pattern. All right. Anyway, so far right now we had 3 scenarios, and now only one scenario in those 3 is left. What is that one scenario? That, let me just mark it, write it down like last time. I heard a good feedback from people that it's easier to understand when we discuss multiple scenarios to write it down. Okay, that's good. This is what I've been telling my students to do. Write your notes on your charts. ED contracting from the high of 23,233. 23,233. So from, yeah, this is much easier. So this is the first scenario which is still playing out. From here, from this high, this is a clear-cut three-wave pattern. Now, how is it a three-wave pattern, sir? For those who are studying the Elliot Wave Master Course, there are some things which I told you will not be able to understand. A higher level of precision only your advanced concept members will understand. Many will have, or maximum wave analysts will consider this as a impulsive down 1 2 3 4. This is not a 1 2 3 4 pattern. This is your A, B, and C. Now again, like I told you, do not compare my analysis with other wave analysts out there. They might have lakhs and lakhs of subscribers, but they will be absent when the real move comes. Anyway, I'm not telling you to judge me or anyone else. Just practice on your own, take your inputs from wherever you want, and continue to follow them. All right. So main point is here, you must do some analysis on your own, and then whatever videos you watch, whatever trainers or mentors you follow, just take their input also and see if it helps you or not. That's all. Anyway, this is one leg of the move. Massive time pass happened last week. I'll be honest with you, massive time pass happened. This is another leg in the market. So let me make it permanent. Second, one leg here like this, and then the next leg started on the upside. Okay, we had a correction. So what did we have as per our analysis? We wanted to see at least by the 21st market makes a swing low, or on Monday. This was our previous analysis. So what did the market do? It wasted the entire day of expiry. It wasted the entire day of expiry. Now, the point where I told you about reverse engineering, we'll discuss now from here. In this ED contracting pattern, if we are going to see your A, B, C, D, and E, first thing you must note is that this should not break this down move wherever it comes, 510 points. So because what is the rule of a ED contracting? A, B, C, D, E, right? A, B, C, D, E. So we are in a C leg. So C should be smaller than your A wave, right? It should be smaller than your A leg. Simple as that. This has to be smaller than 510 points. So let's just draw 510 points where it comes. It comes nearly around 22,537. Okay, I'll just mark it here. 22,537. Okay, so what do I mean by this? This means that the next leg of the fall, when it continues, it should come and it should cross again on the upside, give us a correction on top like this, but it should not cross your 22,537. So basically this is nothing but your A, B, C, your D leg will come, and then final fall as E leg. All right, I hope this is clear. We'll discuss what are the time frames and time possibilities, but right now, price action you understand now. Let's zoom in. Now let's forget. Now you're telling me, sir, what is the next step I have to do? I have to follow. Drop should not cross 22,537 and give a pullback. All right. This is your note you have noted. Drop should not cross and it should give a pullback. Simple. Now, fall. If I analyze this fall, now we're talking about reverse engineering, right? Reversing the counts. If you look at this fall very closely, I'm going down to a 5-minute chart. If you look at this fall, this is an irregular flat. Irregular flat pattern. In the corrections you have seen that irregular flat pattern. What is the low risk setup? Why is this a low risk setup? Because once a previous move comes and market makes an irregular flat pattern, again the next move will be the same trend. Suppose in this case this is a bearish trend, right? So the next trend will always be bearish, right? This will always be bearish. Now how will it come? It will be very fast. That is the famous, that is what irregular flat patterns are famous for. Any flat patterns, they're famous for this. The next move will come very fast. It will be the same direction. I'm not talking about the points, I'm talking about direction. All right. If this is an irregular flat, how is it an irregular flat? It is very clear that market is making a 1 2 3 4 pattern. Now this again, naked eye, it will be very difficult for you to understand. Advanced concept members will easily understand this. This entire pattern was an A, B, but this pattern is not an impulse. What? Simple. I'm telling you, this is not 1 2 3 4 5. This is not 1 2 3 4 5. First shock. So if this is one leg, another leg, this is a three-wave pattern. This is a three-wave pattern. Again, your YouTube course people will not understand. Those who have gone to the advanced concepts, those who have studied that, only then they will understand this. Fall here. Okay, we understood. Okay, some correction happened here. Next fall. So this is very clear, right? 1 2 3 4 5. Is it very clear? If you look at this pattern, this is a three-wave pattern. This is one leg here, A, B. This is your C leg, right? Or this is one leg fully, this is another leg, and this is another leg. It's a three-way pattern. This entire fall is a three-way pattern. Regardless of how you mark it, this is a three-way pattern. Bottoms are not made in three-wave patterns. They're made in either impulse, either your diagonal pattern, or dump and pump. This is none of them. This is a three-wave pattern, all right? If you look at the extensions also, there is some hidden indicators which we use. Again, advanced concept members only know that. You can see it exactly comes to 1x, right? So naked eye, those who are studying, you will get confused. These are the points where you get confused. But anyway, I'm not going much deep into this. This is a three-wave. So this is an irregular flat pattern. Now, how do I reverse engineer it? Where do irregular flat patterns form? It gets formed in wave 2, wave 4, or some wave B, some wave 2, some wave 4, or some wave B. All right. So we'll take each scenario simply. Just I'll be very quick here, not very difficult. If it's a wave 2 pattern, suppose this is a wave 2 here, then this is your wave 1. So what are we doing? We are going backward counting. Okay, we are going backward counting. So first case, if this is wave 2, then this is your wave 1, and we are going to go for a wave 3, which will directly be gap down and will go straight down. So in that case, we can expect market to go and touch 23,000, 22,350 to 400 level, 22,350 to 400 level in the next week, because it's a wave 3. All right. Now, how do I confirm whether it's a difference between 4 or wave 3? Sorry, if it's a wave 2 or a wave 4. If it is a wave 4, now we'll go to the second scenario. If it's a wave 4, what is the next move? It's a wave 5. Wave 5 can come in a gap down directly, no issues with that. Then this entire move should not cross 22,632. All right. So what I'm going to do right now is I'm going to write down some notes here for myself. Very simple. If wave 2, then we break 22,630. Sorry, 22,623. Right. And 22,350 to 22,400 possible. right? So I have noted this for myself. If this is the case, then we can see 22,350 and 400 possible next week. This is the major bearish scenario. Now, if it's wave 4, what will I do? If it's a wave 4, reverse wave reversal, okay, price should not cross. Should not cross 22,623. Okay. So what have we done here? Very simple. We have created your conditions for if this is a wave 4 or a wave 2. Simple. That is the conditions we have created. Now, one more condition. I told you wave B. If it is a wave B, then what? Wave C can easily break down, right? Wave C can easily break down. In that case, wave C, what did we have here? Like I said, we have no specifications for how far wave C can go. It can go 1x, it can go even more beyond that, right? So in that case, what we expect that price should not break 22,537. Why? If you remember the higher time frame, this is a condition, right? 22,537. If it's an ED contracting pattern, in this pattern, if this is the pattern, it should not break this. So before that, so if it's a wave C, if it's a wave C, the wave C price should not cross 22,537 and give pullback and give a pullback, right? So these are some methods how you can easily reverse engineer your counts. But question here is, sir, in any chance if 22,537 breaks next week, what happens then? Because this is a wave 2, right? Wave 2 possibility is what? 22,300 to 22,400. In that case, if it breaks, we have to change the entire count, right? We have to change the entire count. So these are the three possibilities right now on a smaller time frame to track here. After this, what will happen? We will go for a pullback. This entire whatever drop comes, it will be retraced, that is for sure. All right. In these two scenarios, whatever drop comes, it will be fully retraced. That is the entire plan for next week. All right. So basically, this is your 1, 2, 3 or A, B, C, D wave, and then E wave. Now, this D and E wave, we'll talk about that in time analysis. Right now, it's too early to decide. We have to wait for this confirmation on a smaller time frame. I hope so far you are following me. It's very clear how we are decoding the market. All right. So, small, quick look at time analysis. Here, next week onwards, very simple. We had 21st. This is your time cycle zone, minor time cycle zone. We had a good fall from the major time cycle zone. The minor time cycle zone is here. As per Feb month, minor, smaller time. This is a minor time cycle. This is one more, even more smaller than that. It tells us from 21st to 28th has to be one single trend, whether it's coming in a form of correction, whether it's coming in form of a big rally or small rally, whatever, it has to be one single trend. In this case, what we have noticed the previous time is that when till the end and the next day the trend started. So imagine 21st is finished. What if tomorrow on that is your Monday, gap down, and then or any other gap down or gap up, whatever, market reverses from there. All right. So in that case, we will see a pullback towards 27, 28, but it might not be a straight move because of the structure in the market, right? Because of the structure in the market, it might not be a straight move. You see this? It will be some choppy move like this. And then fine. Okay. So we have that in mind. We have that in mind, and we will follow this for the next week. Any changes, I will live update in the Telegram group. So if you have not joined that, make sure you have joined. So I hope you have understood how we made a plan here. And now coming to the main point here, what I want to discuss regarding my own volume analysis research. First point I wanted to highlight and especially remind you guys that when the Jan month fall was happening, I told you that this is a fake fall. This has to be retested fully. We had a 78% retest almost. Market changed its structure here, and then we had good guidance on time analysis. We were able to catch this turning, right? All that was there. We cannot decide whether market reaches this point or reaches this point, but as per analysis, we know whatever happens, even if it goes to 21,000, this move, this zone will 100% come. Now, POD concept, only advanced concept members can understand POD. Check multiple time frame POD here. Check higher time frame POD. Go to lower time frame POD and see. You'll understand what I mean by that. Now, in my volume analysis research, I'm telling you here, maybe nobody else would have told you. The fall entirely, the one which started from Jan and before that, December. I've already highlighted this method where I identify some traps in the market. I told you the Indian operators or the so-called smart money have two-stage moves, right? This fall and then a recovery, major shorts were covered. All right, major shorts were covered. But what is the meaning of that? What is the meaning of that, and why was the market still going down in case even shorts were covered? So the reason why everyone is looking for a fall, why is it falling? Why is it falling? I'll tell you right now, markets are illogical. You will not find a reason for that. They move as per the psychology of the participants and mostly the stories or insiders moves, which you don't know, right? Market does not need shorts to fall. Lack of bulls also can trigger a fall. Do you understand this point? Market does not need bears in the market. Lack of bulls also, lack of demand also will increase the selling pressure. But simple as that, in my analysis, I've told you every fall which came, this point here was a weak one. The new fall which came, this is another week of fall. I'm not talking about RSI, I'm talking about volume wise, right? Short pressure, selling pressure. What do you mean selling pressure is weak when market is falling thousand points? Now, this is that point where you will not understand unless you have done volume analysis, especially one of my methods. So I know for sure right now, the current move, I'll tell you something which possibly you can contradict, possibly you won't understand also. The amount of shorts in the market right now, here, here is so much lesser than the amount of shorts that were already there in the market. Meaning every time the pullback came here, the amount of shorts exited are huge. Every small pullback, amount of shorts exited were huge. And it was at this point in the live market, before the January month recovery started, right? Before the January month recovery started, I told you that the game is finished. This was, I think, pre-budget move, pre-budget rally. I told you already, Jan month futures game is finished. Now, shorts had been recovered completely in the Jan month, but shorts did not get recovered in the Feb month. This was all printed in your Telegram group. I've shared this. Shorts in the Feb futures has not yet been covered. So, what is the two-step trap process? First, your shorts will get covered, right? So short covering will trigger a move. Then there will be a new fall in the market. This is the trap move. This has to break the previous swing low from where the shorts are covered. Now, this is the trap move. Now, applying this concept here, what did I tell you? I am waiting for shorts to get covered of Feb month. If you remember, I told you this Feb month shorts I'm waiting to get covered. This triggered from our time zone. This trigger came in our time zone, right? This was our time zone and the trigger started from here. Short covering in Feb month. Do you understand what I'm telling you? In Feb month futures. Simple. Then what did I tell you? I am waiting for this swing low to break. If this swing low breaks, so what is the first step? Cover the shorts, right? then this swing low has to break again. Why? Because this will confirm the first stage completed. The second stage is the trap move. Now question is, sir, how do we know when this trap move is going to get over? We don't know. We have to study the structure, right? We have to study the structure on our own. No one is going to come and tell us, bhai, trap move is finished, go long. No one is going to tell you that, because insiders won't, or no, they won't need to tell you. They do their own work on their own. Now people think that they are working for some, they wait for some big event in the news, so on and so forth, but that is not the case. If your, if this rally, if you told me if it's because of beautiful budget and so on and so forth, budget might be good, but what happened after that, right? So right now people here were telling me that this fall in the market came because of Trump tariff plans. All right, this rally came because expectation of budget. Some people are telling me that Trump did not put any tariffs on India, that's why the rally came. So what happened now? That's my question to you. Suddenly, did the budget become bad, or did Trump put so much tariff on India that Indian market fell? This is what I'm telling you. The more you find the reason why market is doing this, why is this happening, or the reason for the moves which are going to come, or already happened. If you're looking outside the charts, you are a complete fool. You will be spun in this game, this industry full. You will be, your mind will be brainwashed again and again and again. So this small rally which came in the market, someone told me, the news told me that Modi ji and Trump were meeting together. I'm happy they met. They are good friends, whatever. But point here is that, did they, something bad happen for the market to fall again? So the reasons they are telling you in the news, every week it'll change. I'm not saying don't follow the news. I'm saying if you're a fundamental investor and so on and so forth, that might be helpful for you. But right now, as a trader, if you're looking anything for a move outside the charts, any reason for it, you are a fool. That is all I'm telling you. Anyway, going on to our analysis, this is the main topics for the video which I've covered right now. Now I'm going to just clarify the intraday method again for someone asked me a question. So I told you I will explain it in the next video. What we follow in this is actually part of our super trend strategy. I have not yet released the super trend strategy. Every video I'm trying to explain this method and again. For the new members, you can stay and listen. Those who have finished, those who know this, I'll just share the screenshot in the Telegram group of this levels and also the weekly levels. You can follow it there. All right. So here, what we are doing is on using time and price. This is our vibration method. I don't teach you how to calculate these levels. I directly give it to you. We have certain different red and white levels. Now, these are major and minor Gann levels. Maybe that's topic for another time. But right now, keep in mind that price is there and we have a time zone, 9:43. What do we want? We want to find which level does the market go and touch exactly in this time zone. All right, which level market touches exactly in this time zone. If market touches, let's say for example, market tomorrow gaps down and touches this level. If it gaps down and market touches this level, what do we see? We want to find a vibration level. So the point where price and time touch is the vibration level. Okay. After that, what do we see? We want to see whether market finds a bullish setup or market sustains below it so that we can find a bearish setup. All right. That is all very simple method, not complicated at all. Who has the best advantage? Those who have studied the Elliot Wave Master course. You will have the best advantage. So I want the new members to follow this for a few days. The remaining, most of them are already following on Telegram group. All the updates will be shared in the live market. To confirm which is the vibration level, I'll do that in Telegram group. Intraday, anything else I need to share, I'll share it in the Telegram group. All right. Now the link for that is in the description. Simple. This is method is very simple. You don't have to get confused. The entry and exit for that super trend strategy will be released. Those who have taken settings for me last week, and those can practice that in your demo accounts. Those who have missed it, you have to wait till the month end, right? Only then I'll release the super trend strategy. Now, weekly levels, same thing. 25th Feb is your 9:15 to 10 a.m. So the first hour is very, very important. 9:15 to 10:30. Here, your weekly time zone. First time zone, second time zone is on 28th. So as per our price analysis, if you remember, if we get a gap down and then if we move up like this till the 28th, it'll be very, very good, right? So we can complete a pullback in the market. But again, this is only speculative. We are not uh, predicting where the market is going. We are making a probabilistic path. We need some confirmations here. Only then we can plan the further move ahead. Simple. So same method using NIFTY 15-minute chart. The intraday method, which I shared earlier, is 4-minute. It's very important. 4-minute chart. If you don't have a 4-minute chart with you, use a 5-minute chart. Not much difference, 1 minute only, right? So it's better use a 4-minute chart or switch to a 1-minute chart. All right. Now, 15-minute chart for your NIFTY spot weekly levels. What we need, this entire time zone, which level does the market touch? Entire time zone, which level does the market touch for weekly setup people, those who look for one trade practice, again, practice only per week, one trade per week. What will you do? This is intra-week type. So you will look for vibration level. And then from there, suppose tomorrow, for example, on 25th morning, this is the vibration level. This example I'm telling you. From here, does the market sustain above it or does the market sustain below it? Based on that, you can plan a setup. All right. Trending move you want to catch because you're an option buyer or futures player. Sideways move or any move you want to catch because you're an option seller completely is based on the structure of the market. That is why I told you, those who have studied the Elliot master course and who have finished the advanced concept will have the most beneficial or most advantage in understanding what to do. It's much, much easier. I have been posting screenshots of one of the member who has been in a winning streak, but again, I've told him specifically to practice in a demo account, but he's doing it in try trading the live market. This is not what I want you to do. Keep that in mind, guys. I don't want you to be I don't want to enable you to trade in the market. I'm giving the tool so that you find your own setup. All right. You find your own setup. This is a very important disclaimer. I'm telling you, I'm not giving these levels so that you go and trade directly in the market. I'm giving you these levels so that you use them in your own research, in your own education, and you can make your own setup. All right. I'll see you in the next video, guys. Till then, take care. Have a good weekend. I'm sure next week will be good. But again, I've told you long back in the beginning of the month, majority of people have a highly negative energy next week, first week and last week of Feb, I've told you. So those who have the energy charts, who have made the energy charts for Feb month, they already know what to do, how to navigate. But if you have not made your energy chart and you don't know energy chart, what is it about? The link is in description. Have leisure time and watch it. But again, negative energy is dominant next week for many people, including myself. There is some part, but again, whether it's neutral period for me or whether it's my luck energy and my workflow energy overcomes it, that only I know because I have my own energy chart, right? So maybe you have not made your energy charts and you don't know what is your period, whether it's negative period or high positive period. But again, not my responsibility. When I've been asking for a long time who wants to make energy charts, contact me. Those who have made it, they are in benefit. I have good, very positive feedbacks. I'll share it in the end of the month, but right now, focus on being conservative next week. So plan, if you want to make a plan, use the levels and the guidance I've already given you, what to plan for, how to look at the structure. All right. So I'll see you in the next video, guys. Till then, take care.